Hello everybody. The markets have been on a turnaround this last 1.5 months from the negativities of the year 2018 and the beginning of 2019. We saw the market setting record highs last week. To talk about this and offer his perspective on the market scenario, we have with us Dr. Vijayakumar, Chief Investment Strategist of Geojit Financial Services. Welcome to the session, sir.
Hi.
The markets have been on a bullish note. The bulls have started basically making a comeback. What are the reasons for this bullishness? Because last week the Sensex and the Nifty touched record highs. Nifty touched 11,760 in the markets last week. So what are the reasons for this bullishness?
Yes, the markets are bullish, but it is important to understand that this is a global bull run. This is not a bullishness confined to India alone. Okay. If you look at the MSCI indices, the Morgan Stanley All Country Index is up by 14.1% for this year till date, from January 1st to April 5th. So 14.1% in 3 months is a ferocious bull run. Morgan Stanley US is up by 15.7, and Morgan Stanley Emerging Market Index is up by 11.9. So this is a global bull run. There is no doubt about that. And this is a bull run which is powered by global liquidity. The big turnaround, as you said, happened with the Fed's proclamation of a dovish monetary stance on the last day of January. At the beginning of this year, it was believed, and it was discounted by the markets also, that there will be 3 rate hikes this year, on top of the 4 rate hikes that we had last year by the Fed. But then suddenly, due to the global slowdown, the Fed declared that the rate hikes are on hold. Now people are even talking about rate cuts. So this has completely altered the scenario for global capital flows.
Right. So the GDP growth basically has helped the markets.
Yes, slow down. There's a paradox. There's a paradox. Sometimes bad economic news can be good news for the markets. So Fed is very dovish. After that, the ECB, European Central Bank, also came out with a very dovish monetary stance. The People's Bank of China is implementing a monetary stimulus by cutting the reserve rates. Japan is continuing with their very dovish monetary stance. So this has triggered a risk on in global markets, and money is flowing from bonds into risky assets like equity. For instance, to give a clearer picture on the capital flows into risky assets, last October the US 10-year bond yield peaked at 3.26. Now it has come down all the way to 2.5. So that means money is flowing from bonds towards equity, and a lot of money is being attracted into the emerging market. So this is, in brief, a global bull run powered by global liquidity.
Right. But a part of it also could be right now in all the domestic investors' mind, it is all about the elections that is coming up in the next couple of months, the new government coming into power. So there is a thought that the markets are already discounting the NDA government coming back into power. Your thoughts on that? Does it really have an effect, and can it power a stock market rally?
Yes, that is one view. Many market participants believe that the market has already discounted the return of NDA to power. But I don't completely subscribe to that. The reason is, as I said earlier, the Morgan Stanley Emerging Market Index is up by 11.9% year to date. But Nifty is up only by 7.5%. So we have a catching up to do. So this underperformance of India in this global bull run is due to the concerns about the election outcomes. It's quite possible that the coming back of NDA to power might be the possible election outcome. That must be the scenario. But personally, I would say it is a little bit premature to conclude, because in a country like India, in a complex country like India, it is very difficult to predict the election outcomes. Market does not have any mechanism of predicting a probable election outcome.
Or anything, it could be, there has been a lot of cases where the markets have tried to predict the outcome, but then they've got it wrong
Yes,
also. Yes.
that's right. We got it wrong in 2004. The market got it completely wrong.
Yeah.
In 2009 also we got it wrong.
Yeah.
And globally also the markets got Brexit wrong.
Yes.
The markets got Trump presidency wrong. Yeah. And recently the victory of Mahathir Mohamad in Malaysia, the market got it wrong. Yeah. So the market can predict possible economic scenarios, probable emerging economic scenarios, but political outcomes are very difficult to predict. Okay. So the market has not completely discounted that, partly the market has discounted.
So is this a sustainable rally? I mean, because it was all negative the last year, so this year again the mid caps and the small caps also have started performing a little bit better. So can we expect this to sustain for some more time, or will the election volatility again add a little bit of negativity to the markets?
Well, it can sustain, because with this kind of robust capital inflows into emerging markets, including India, the rally can sustain, but there are two risks to this sustainability of this bull run. One is, of course, a very fractured election mandate with neither the NDA nor the UPA in a position to form the government. That can be short-term disruptive. In the long run it won't make much of an impact, but in the short run there can be a very negative reaction to such an outcome.
The regional parties.
Yes. That is, suppose a strong party, suppose the NDA doesn't return to power, and the UPA decides to support a third front from outside without participating in the government, that will be a very unstable government. The market will not like that. That is one negative, that is a probable outcome. In India all these are possible. A 3% vote swing can impact 100 seats. So you can't completely rule it out. You can't rule it out. Then the second risk to the market is a global slowdown aggravating into a recession. Right now it is a global slowdown, but global slowdowns can sometimes aggravate into a recession. As you said earlier, this bad news on the economic front is becoming good news for the markets, because when there is an economic slowdown, the central banks will be dovish, interest rates will come down. That is good for the markets. But if the slowdown aggravates into a recession, that will impact corporate earnings, and it can impact the market also. So that is one area where investors should be watchful.
So coming back to the stock question, what should be the ideal investment strategy going forward in the short term, considering the elections are coming up, and in the long term, what would be the ideal investment strategy for investors?
For the last many months, we have been advising investors to buy before the elections. And also we have been advising our mutual fund investors not only to continue their SIPs, but to scale up their SIPs if possible. Those investors who responded to this strategy would be very happy now. But right now, because of this bull run, the valuations have become a little bit stretched. They are not yet in a bubble territory, but the valuations are a little bit stretched. Therefore, it would make sense to take a breather, continue with the SIPs, buy on dips, but it will not be a good idea to make very aggressive purchases at this point of time before a clearer election outcomes becomes discernible. As you said, mid and small caps also are now participating in the rally. So systematic investment plans should be continued in mid and small cap. The problem with mid and small caps is that there is no earnings visibility in many of the stocks. Whereas in large caps, many of the large caps which are participating in that rally, that earnings visibility is there.
So it would be more of a wait and watch and then buy on dips is what you are saying.
Yes, wait and watch, buy on dips, be cautiously optimistic.
Right. Thank you very much, sir. So there you have it. The current stock market run is mainly being powered by global liquidity. Investors are awaiting the election outcome, but irrespective of whichever government comes into power, the long-term bull run remains intact, although we might see a little bit of volatility in the short term. Wait and watch, buy on dips is the ideal strategy that has been told to us by Dr. VK. Thank you very much, sir, for this
Thank you.
opportunity. Thank you.